Well, if in a nutshell, the Japanese housing market went nowhere for 20 years. In fact, went quite a long way from peak to trough. And that was despite the fact that the Japanese central bank, Bank of Japan, cut interest rates to zero over that period. Markets are a function of money times confidence, and I'm afraid that confidence in the UK housing market is being severely dented and is going to continue to be severely dented. So my outlook for the UK, our outlook for the UK market over the next few years is for a gradual decline of somewhere between 20 and 40% from peak values, depending on which area you're in and what type of house you're in. We have, in our book, Wake Up, we recommended that people thought about, shedding buy-to-let investments as an example. And we stick with that view. We think that, the overstretching of people's personal balance sheets by taking on too much debt relative to their incomes, as an example, is going to lead to a continuation of a bear market in housing. And we're only seeing the beginning of that now. So, housing is going down, and I think everyone should be aware of that in their investment planning.
Because it's normally most people's biggest asset. It
is, and I heard today that the average person in the UK who's got a house has got £127,000 of equity in their house. A lot of that comes from the rise in prices over the last few years, but you have to remember that in the 1960s you could buy a 4-bedroom house for about £3,000, and so the prices have gone up a hell of a long way, and it's not inconceivable that they could go down 20 to 40%. In this current downturn. But in a downturn, we certainly are, Giles. I think we are absolutely. We've tipped over the edge of the cliff, and we're not going to be looking back up for a while.